For months, Indian markets were trading under a cloud. Tariffs were high, uncertainty was higher. Exports faced pressure and investors stayed cautious. Now that overhang is lifting. Overnight, India and the United States sealed a long-awaited trade deal. US tariffs on Indian goods have been cut sharply to 18%, and this one move has changed the market mood in a big way. So with the deal finally sealed, which sectors are poised to benefit? The market reaction was instant. In early trade on Tuesday, the Sensex jumped over 2,270 points, rising to 83,937. The Nifty 50 surged nearly 700 points, touching 25,780 by mid-morning. That's a rally of close to 3% in a single session. But why did this happen? Because the deal removed a key source of stress. Foreign investors had been pulling money out, worried about trade and geopolitics. Now that sentiment is reversing. Analysts say this is less about short-term earnings upgrades and more about restoring confidence. India once again looks investable to global capital. With lower tariffs, analysts suggest export-heavy sectors are back in the driver's seat. At the top of the list, IT services, pharmaceuticals, specialty chemicals, and auto ancillaries. These industries depend heavily on the US market. So lower tariffs improve price competitiveness, order flows become more predictable, and margins stabilize. Labor-intensive sectors also stand to gain. Textiles, apparel, engineering goods, marine products, and food processing are expected to see stronger demand. In fact, some seafood exporters and agri-linked stocks have already seen sharp moves. The impact does not stop at manufacturing. As exports pick up, logistics firms, ports, and freight operators are likely to see higher volumes and better utilization. There's also a knock-on effect on banks and NBFCs. Export-linked sectors account for a meaningful share of bank lending. So lower trade stress means lower credit risk, and that's positive for asset quality and overall financial stability. Besides, the deal could do more than lift stocks. Higher exports support growth. Analysts expect India's growth rate to strengthen in the coming year. Foreign inflows could return, the rupee may stabilize, and pressure on the balance of payments could ease. Together, these factors improve the macro backdrop at a time when global growth remains uncertain. But this is not the finish line. Details of implementation still matter, as does how quickly companies convert sentiment into earnings. For now, the spotlight is back on export-driven India. The rally may have started with tariffs, but its longevity will depend on execution. Follow for more stories.